Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Tuesday. Happy Tuesday. Hope everyone had a nice long weekend. Of course, we still did our Sunday Notes live show and we had a quick Charts and Coffee yesterday. So big shout out to those of you that were putting in the homework on a day off, ready to hit the ground running today. All right, so as always, gang, we are going to do a little bit of recap of what we've got going on in the markets this week in terms of hot zones and trends. And then how are we managing the overall environment that we're in right now? How are we managing what's happening in terms of longer term opportunity? And by longer term, I'm talking, how do we take advantage of this pullback, this weakness, and build, deploy cash in our longer term positions, our portfolio? Because, look, this isn't something that we can necessarily set our calendars to, but as the Federal Reserve hikes rates, there is sort of a repetitive cycle, right? And that is they're going to hike rates and eventually they're going to cut them again. And this is what we do. Breathe in, breathe out, right? Hike rates, cut them again. Hike rates, cut them again. So the weakness that we see now in names that we feel are names we want to hold for a longer period of time. This is not speculating. This is about, hey, can I get the Apples and the Amazons and the NASDAQ and the Dow and maybe things like industrials and healthcare? Can I get these sectors and or stocks within these corners of the market at a better deal? And that's really the focus in terms of how we want to operate going forward. And so hang on one sec. I think our audio is good. All right. Yeah. Okay, good. Audio is good. So let's do this here quickly because this is super important. This week, granted, we had the FOMC last week, but this week we really don't get a break from Powell, not in any way. So, of course, U.S. bank holiday yesterday. Now, remember, we still had Ballard yesterday. We still had Lagarde yesterday. Rolling into today, we have, as you can see, existing home sales at 10 a.m. That's the first hot zone that we're going to get today. We have Meester at noon Eastern. And then tomorrow, now this is where the marketplace, traders, investors will be looking ahead to tomorrow because we have two days of, and I don't know why they don't call it Humphrey Hawkins testimony anymore, but this is what it's been forever. 2 days of testimony from Powell. Wednesday starting at 9:30, Thursday starting at 10 a.m. So we're going to likely see, and for me, I'm going to have to pivot. I'm going to have to pivot in a big way from necessarily my favorite of the 4 day trading windows. I'm going to have to pivot away from focusing on, say, the pre-market window that I like. Maybe I'm going to look at the latter half of the day after Powell's done. What type of close do we get? That's another window. Maybe we'll also see that then go into the Asian session or even early with the European and UK. So there are other windows. And so if I can't use 9:30 to 11:30, I will use the other windows for opportunity. But that's what we have coming up this week. That's your hottest of the hot zones coming up this week. So again, heads up, Powell tomorrow and Thursday, existing home sales at 10 a.m. And then we have, of course, Meester at noon, probably all going to sort of be pushed aside as we await how Powell is going to respond to questions going into those 2 days. All right. So as always, gang, this show is about your questions. So we're going to go ahead and tackle them. Of course, feel free to type them in and we'll go from there. And then as we go through the questions, gang, a couple things. I definitely want to highlight some of the opportunities that have been organizing as we're going into the 9:30 to 11:30 window, but what's been setting up in the earlier window, the pre-market window. And we've had some interesting action, but it definitely feels like the market's still kind of lethargic. We're looking at some bounces from the sell-off in indices and in crude oil from Friday. So we'll see what kind of mood the market is in after 10 a.m. With that in mind, let's go ahead and kick it off with Martha, who asks, when looking at the daily, hourly, 4-hour, how many days do I enter when customizing my time frames? For example, 1 year, 1 day. So Martha, I do not use a 4-hour. I do not use an hourly. With the daily, 2 years, 1 day is fine. With the weekly, I'll go back 3 to 5 years. With the 5-minute, 2 days or 5 days are fine. But however, when I did use the hourly, when I did use a 4-hour, I would go back about 2 weeks on the hourly, and I would go back a month on the 4-hour. So that's usually the market memory, the market look back that I would focus on. But that brings up a great point. Raghee, you don't use other time frames other than a 5, a daily, and a weekly? No, in the last, it's coming up on 10 years now, I've been slowly moving away from scanning multiple time frames looking for opportunity. I am either day trading on the 5-minute, so then my focus is exclusively on how could I get in and get out by the end of the session. Sometimes I will crack the 5-minute open and look at the 2 to see if there are nuances in terms of stalls and wicks on a 2-minute, but all it is sort of looking inside the 5. All my day trading decisions come from a 5-minute time frame. And then if I'm going to be playing trends or swing trades, I'm going to do that exclusively from the daily, because the entry sets up on the daily, the price levels are set up on the daily, my stops are based on being in the market overnight, and my targets are based on support and resistance on the daily. And then, you carry that over to the weekly. So one of the best things that I have done is, really embracing, pick the time frame that you want to focus on for that task, whether that be swing trading, portfolio, or day trading. And that's made my life a whole lot easier. I'm not jumping around 3, 4, 5 time frames any longer. Thank you for the question, Martha. Love it. Great question. All right. Yeah, we got Kapow. Yep. 9:30 and 10 o'clock. It will definitely be an interesting one as we are looking, we as a trading and investing public, everybody wants some more clarity on what it is that the statement and the 3/4 of a rate hike. Are we going to see another one? Now, here's another thing, gang, and I'll be doing this in the room with the Sector Secrets Mastery folks tomorrow. I'll be with you all tomorrow for our live trading and Q&A. What we'll be doing is not just, frankly, I don't care what he says. Who can understand half of what he says anyways? Because it's always a game that's being played with communication, front running what he's going to say, reacting to things that were surprising. The easiest way is to find a handful of instruments that give you a rate of change, aka a trending perspective on that testimony, and that's exactly what I'm going to be doing, and mostly in a corner of the market that I talk about a lot, and that's the FOMC FedWatch tool. How are the Fed fund futures and what are the target rate probabilities doing in terms of expectations for 3/4 of a point, half a point? How are those moving? What is the end result after he's done? So yeah, really interesting stuff. All right, Jim asks, when using the line in the sand on Tuesday after Monday being closed, do I use Friday or the shortened Monday close? Great question. So remember, the shortened Monday close line in the sand, and I actually have 3 different things that I do in the morning. The line in the sand is probably the most important and the easiest, by the way. And so what we do then is, remember, there was still opinion on Monday. It just wasn't U.S. opinion. So I'll have to keep an eye on both. Great question. I'll have to keep an eye on both. And then that, kind of reminds me, these kinds of questions, gang, tomorrow, Wednesday at 8 p.m. So if you haven't registered already, we're going to do something very different for the second webinar of my upcoming class that's coming up this Saturday. I know a lot of you have already registered and ready to go for the class. This is going to be a must at least either watch on replay or must attend, because this is really preparing us for the class. And this is going to be the interactive Q&A, dissecting some of the recent trades that I took last week and likely the next day or so before tomorrow's webinar at 8. breaking down some trades, taking your questions, explaining HPMRs, explaining why they are the best way to understand and decode volatility. So I'm super stoked for that. And that's a really good, that's a really good question, Jim. When we are looking at a line in the sand coming out of the weekend, there was an opinion on Friday, but there was an opinion on Monday too. And those are some of the things that I will definitely look at. You got to look at both. So Ian, yeah, you got to look at both. All right. So Al, hey, how you doing, Al? I know you steer away from sub $10 stocks, but is it okay to trade Siri, Buffett stock, lots of volume? So if you have volume, yes, that's fine. If you can find those volume ledges, but I will still typically steer away. Now, look, Buffett, you mentioned Buffett. So here's the problem. Not that Buffett's the problem nor the stock, Al, but here's a problem. What is your time horizon and what is Buffett's time horizon? Unless your time horizon is going to sync up with his patience, which is basically the day after forever, right? Unless you're on the same time horizon, it's going to be a little tricky. So if you're looking at it as a trader, the Buffett aspect to it is only going to be as useful as when his holdings become public. So be careful with that. If you have volume, that's fine. This is still actually, take a look at SIRI. It is still a neutral trend. So yes, you can look for overbought, oversold here and try to find as we see this slow stow stinking down below 20, that low level, that would be something you can keep an eye on. Sure. All right. Next up is, would I go short on double green on an hourly chart? Would I go short on a double green on an hourly? Well, Avi, again, kind of going back to what Martha asked, I don't trade hourlies, but I can tell you this sort of in a blanket statement. I will not short anything. As a general rule, let me put it this way, I will not prioritize the short, right? But there's not enough for me to really go on there. I'd have to look, Avi, what was the trend that preceded? Was it chop? Was there a volatility move? What kind of pattern am I getting? So it's kind of a tough thing to say never, but I will not prioritize a short on a double green, right? Meaning, where is the short first? Then if there is a buy, maybe, but as a general rule, I try not to. And again, hard to say yes or no, but I can pull up, here's the hourly. Let's pull up, for example, the S&P on the hourly. I still have my hourly price movement ranges here, right? So I can still use HPMRs on the hourly. So if I'm looking at an hourly, support, green grab candles. So for those who saying, Rag, when you're day trading, does it have to be the 5? Can I use the HPMR on a 15? Can I use that HPMR on an hour, Avi? To your point, absolutely. Because the HPMRs plot the same way on a tick chart as they do. And I don't actually, do they work on tick charts? I don't use tick charts. I just kind of wanted to have a dramatic example. They work the same way on a 1. And I do believe they work on a tick. But anyways, they'll work the same way on a 1-minute chart as they would on a 60-minute chart. The zones are based on time and volatility, not the interval. Remember, every other, and actually the bots corrected me, they do not work on a tick chart. See, there you go. I don't use ticks, but I was kind of showing the dramatic of 1 minute and 60. 1 minute and 60. So if I am looking at a 60-minute chart and a 1-minute chart, time and volatility are going to plot the same way on the screen. But the underlying trend of the 60 could be dramatically different than the underlying trend of the 1. And remember, the cool thing about time and volatility tools like the HPMR is, and actually it's the only one that I know of, nothing else does that. But here's the cool thing about it. When we look at other tools, they are going to have dramatically different readings. Slow stow, moving averages, my grab candles, Darvis. You're going to have a different look on a 1 than a 60. But with HPMRs, the zones are exactly the same. So for a lot of traders wanting to look at different time frames, but see where resistance and support are, regardless of that intraday time frame, HPMRs do that. So you don't have to trade the 5. Maybe you like a 1, maybe you like a 3, maybe you like a 2, maybe you like a 15. They're very flexible in that regard. Why do I advise against day trading futures on this? Um, what's this, my friend? I don't know what you mean. Why do I advise? I don't advise. So let me just kind of tackle maybe what the question is, because I don't know what specifically you're referring to there, my friend. But I do not advise mini contracts for small accounts. It's an unrealistic amount of risk, even though there is day trading margin. The per point is absolutely the same. All right. So as in the S&P. So I don't advise, Eden, I don't advise not to day trade the S&P. I advise small counts. Oh, toss. Oh, they don't offer you day. Okay, so let me hit a couple points. One, I do not advise minis for small accounts. Micros are great. Day trading options are great, and we're going to talk about all three in the class. And I'm happy to answer questions like this tomorrow as well. If you want to know a little bit more about, well, Rog, what assets can we day trade? Does it have to be futures? Nope. Can it be currency, stocks, options on ETFs, options on stocks? D, yes, all of the above. So from a small account perspective, micros are great, options are great. But as far as toss, why do I advise against day trading on toss? Day trading options on toss is fine. I do it all the time. Day trading stocks, if you want to go the stock and ETF route, trade the underlying, perfectly fine. But you don't get futures day trading margin really in any meaningful way on toss, I believe, until you're north of 25,000. There are other futures oriented platforms, from Infinity to Tradeovate to TradeStation, that I think give you a better day trading margin and, frankly, better, quicker executions. A lot of you will tell me, and this is not just my opinion, a lot of you will say, Rod, my toss is laggy. Who's ever heard that one before? Right? You can't have that. But for whatever reason, it's great with stocks, with stock options. It's great with ETF options. Remember, it was a options trading platform, and it does that very, very well. But I think there are better alternatives for futures. So I hope that helps. Yeah, don't you hate when the spell check makes you have to say something a million times? Yeah, I hear you. I hear you. Whenever I text, yeah, it happens. It likes to correct my name, which is hilarious. All right, so moving on to the next question, and we got a lot of questions stacking up now. All right, hang on, gang. I'm just going to scroll up. And what on your day trading, do you use options? Yes. So Nick, I'm running out of time here in the show, and if you haven't registered for tomorrow, this is definitely something we'll have an hour plus to deep dive. So yes, absolutely. My Sector Secrets Mastery folks know we do this. The futures folks, yeah. And then as far as strike, it depends on the movement, my friend. It depends on where we are, how wide it is. Is it 5 wide, 2 wide, 2.5 wide, 1 wide? So what's the proximity to current price? But normally, Nick, my goal is at or slightly in the money. And expiration when we're day trading, follow the liquidity. You don't have to pay for time when you're day trading, Nick. That's the cool thing. You don't have to pay for time. Meaning that if you're looking to get flat by the end of the day, why would you go out weeks and go out weeks or even many, many days? We have many options, not many. We have some symbols that expire Monday, Wednesday, Friday. And we have, most are going to expire every Friday. So you never have to go too far out in time, which also makes this approach really, really affordable, right? Low risk, low cost. Cost and risk are inextricable. All right, next up, good morning. Thank you very much for what you do. My pleasure, and frankly, my job. Does the Sector Secrets Mastery include the HPMR? All right, lots of HPMR questions. That is why we're doing this session tomorrow. In the futures room and in the Sector Secrets, there is a very limited pack. You have the S&P, the NASDAQ, the Dow, and the Russell futures in the futures room. You also have the futures, those 4 symbols in the Sector Secrets, along with those ETF alternatives to those indices. The packs that we have right now, I don't know, last time I checked, Lorna would probably tell me we're somewhere north of probably 2 or 3 dozen symbols. And hang on one sec, gang. I have my option here. There we go. So I'm going to wrap up, but we have about, I don't know, 3 or 4 dozen symbols, all the ETFs that I trade, lots of stocks, a much broader group of futures contracts, from gold to crude, currencies, metals. So we're constantly going to be expanding those packs based on symbols that I think are great for day trading. So those are the only ones that are included, those 4 that I mentioned. And then, gang, remember this, and I've been getting a lot of comments on this too. I get folks saying, Rag, I'm using a pack from January. Gang, that's like eating 4-month-old bread, right? There's mold on it. You don't want to eat it. You need to throw that away. And so remember, volatility is alive. Volatility is contracting and expanding. So there are going to be at minimum 1 update per month, sometimes up to 3. On a month like this, we're probably going to have yet another update after the month end if there's a rebalancing move. So remember, these are very much a very high, there's a very tight tolerance for these zones that we create with the volatility, and we're updating them quite frequently to keep up with what the market is saying the current mood in terms of range, historical price movement range is. So I hope that answers the question. And thank you for the questions this morning. I actually think I got through them. So I'll see you all tomorrow. I'll see you all in the futures room in a few moments. I'll be in the sector secrets room tomorrow. I'll be in the day trading room tomorrow as well for the open. And I'll also see you all in the options room tomorrow as well if you have more questions and want to see what it is that we're doing. All right, gang, have a great one. I will talk with you all in our very next show. See you tomorrow, same time, same station. Be good to each other.